Welcome to Profit Talks. I'm Profit. Today's Sunday, March 29th, 2026. And today we will also talk about Iran war. It's been a full month now since the operation started. And being honest with you, despite the dovish messages that we saw at the beginning of the week, currently there is no indication that we'll see the end of it anytime soon. And the reality here is pretty simple. We are currently seeing mass deployment of troops to the Middle East. Surely above 10,000 US soldiers will arrive in the coming days and weeks into the region. We already have USS Tripoli in the theater, arrived yesterday with close to 4,000 Marines, and some people even expect that we can see first boots on the ground this month. So today we'll go over the events of past week, and we'll try to see what the prediction markets tell us we should expect in the coming weeks. We'll focus on the shorter timelines by the end of April, because ultimately this war is a bit chaotic, it's volatile, and a month is probably the best timeline to actually do some forecasting. Beyond April, I think it's more of a guesswork rather than proper analysis at this point. So that will be our focus today. So without further ado, let's look at some markets, and I will also talk briefly about oil types, as I saw a comment on the previous video that some of you would like to hear more about different types of oil and how they affect the current global energy shortage. So let's start with ceasefire, and here the story is pretty clear when we look at the chart. This is end of May, but I think it's best to focus on end of April. So as you can see, on Monday, when the Trump message dropped about the possible ceasefire talks, all the ceasefire markets spiked. This one spiked to 60% at some point, then went lower around 50%. And this price action was pretty much sustained up until Thursday. What I think about it is that both traditional markets and prediction markets really wanted to believe that the second track, so the diplomatic track along with the kinetic track of a war, will actually yield some results, even a temporary ceasefire to allow for better negotiations. But pretty soon it turned out that there is actually no intention of doing a ceasefire, because the position of the United States is still a one with very maximalist demands, especially around a nuclear issue, while Iran believes that despite incurring a lot of costs and having their economy decimated, they actually gained leverage in this first round of fighting because they now effectively control the strait. So after Thursday, we started to hear more about US troops deployment, the 82nd Airborne Division, the Marines. We also saw the letter to the Marines and to the Marines reserves that they should get ready for mobilization. And pretty much since then, the price action stabilized around 40%. Currently, we have 38% chances of a ceasefire by the end of April. I expect it to go lower once we hear more details about possible boots on the ground. But currently, we're pretty much at levels we saw end of last week. So in effect, we can see that the pump, the ceasefire pump, or the general narrative pump that Trump introduced on Monday only lasted 4 days. I expect that any future attempts at stabilizing the markets and selling them some hopium will have a shorter lifetime. So if we hear on Monday another dovish message, I expect it to not really influence the pricing that much. after all, there's only so many times you can tease a possible end before all the market participants realize you're full of shit. I believe this is what we'll see next week. And yeah, I think that's all when it comes to ceasefire. I really don't see any chances of a quick resolution. And this is pretty much clear when we look at the shorter dated market. So end of March is at 2% right now. April 7th is at 10% and getting lower and lower by the day. Here you can see the decay of the price of US shares is way more visible. Then when we look at mid-April, here as well, we see that we are even lower than a week ago. So pretty much the stable pricing is on a more longer dated market, starting from April, May through June, where we can see that people still expect to see some kind of an end in the next few months. But other than that, any short-term resolution is rather unlikely. We should see a further drop in end of April US price. Moving next, I believe this next phase of fighting, this next phase of the conflict, which I call round 2, will mostly focus on the Strait of Hormuz. I believe that the US, along with Israel and maybe some Gulf countries, will come to that later, and maybe some NATO countries as well, probably France or Great Britain, will try to launch not necessarily an escort operation, but an operation that's aiming to retake control of the strait from Iran. That being said, any such operation is rather difficult, and as I've been saying previously, the Strait of Hormuz traffic returns to normal by end of April market is closely aligned with ceasefire markets, because there is simply no way the traffic returns to normal without taking total control of the strait or ending the war definitely. So I also expect to see a lot more decay on this market in the coming week, as more and more traders realize that even a fairly quick end to the war wouldn't bring full traffic back on immediately. This is also visible by number of ships market by the end of April. I think this is a more detailed version of the previous one. End of April strike is a new one. As you see, the volume here is still pretty low, but I expect it to ramp up aggressively over the coming week. And as you see, there's 67% chance we'll see 20 plus ships moving through the strait. I think this is mostly connected to the fact that Iran is trying to monetize the strait at the moment and allows passage of some ships for a fee. Traders expect there is a decent chance we will see at least one day with 20 plus ships using this channel. But when we look at any larger amount, for example 40 plus ships, then the chances here are at 25%. And 40 ships is around 40% of Strait of Hormuz traffic. So we can see that traders don't really believe we'll see any normalization in the coming weeks. What they do see is that we'll see probably affirmed control of the strait by Iran. Different countries that are the most squeezed will try to cut some kind of a deal with the country to at least move some essential products through the strait. And moving forward, we also see further strikes on US escort operation, and here the chances are also pretty low. People started to understand that such an escort operation is a difficult feat, and they will need a fleet of destroyers, air support, and essentially convoys that will go in and out of the strait and will need to be guarded at all time where they're in the Persian Gulf. So considering the complexity of such operation and the fact that even when executed perfectly, it will probably bring about 10% of usual traffic to the strait, I think traders rather see some kind of an operation that will try to retake control of the strait by other means than pure escort operation. Additionally, we hear no headlines about such an operation, and considering the amount of preparation that will be needed for an escort, US-led escort, I would say this is also very bearish for short-term prospects. And this is a really dire situation because, as you can see, the Strait of Hormuz had around 100 ships per day before the war, and this dropped pretty much to zero even with the passage through Iranian waters. This is a month without oil. This is a month without gas. As you can see, pretty much 50-60% of the usual traffic was oil and gas, because as you can see, these are tankers. And yeah, we are starting to see first effects on the global economy. We see the news about lack of diesel in Australia. We see the news about reserves getting pretty much depleted across Asia. Especially countries like Philippines or Vietnam are affected, as well as Laos. So the poorer countries in the region that didn't really have a lot of reserves and were extremely reliant on the constant flow of oil and gas from the Middle East. And what we see here is starts to get more and more visible on the energy markets. As you can see, even bullish messages from Trump didn't really help, as pretty much all energy closed above the previous week. So crude oil, Brent oil, Urals. But here, I would also like to stop for a bit and talk about oil and oil types. So last week I mentioned that not all oil is equal, and especially US oil is not exactly a good fit for Asia. And the reason is that there are generally, in a very high level, two main characteristics of oil. So on the one axis, you can differentiate between light and heavy oil. This is what is professionally called API gravity. And you can distinguish between sweet and sour oil, and this is strictly about sulfur content. So generally, in the US, we have WTI, which is light and sweet. Light meaning that it's pretty much behaving as a liquid, and sweet meaning it's low in sulfur. So this is the kind of oil that is not actually very good, because the yield across different product types is not really great. But it's easy to refine, and the most important energy products can be derived from it. Around the US, so Canada, Mexico, and Venezuela, they have the complete opposite. So they have heavy sour oil. Even in the extreme in Venezuela, when this oil is so dense that it's not even liquid anymore and needs to be diluted with kerosene to even be moving from one place to another. So in the US and generally in the Americas, most of the refineries are getting a mix of WTI, so light and sweet crude, and a mix of heavy crude coming from either Canada, Mexico, or Venezuela. And this mix is getting refined in refineries across these two continents. However, in Asia, which is now the most affected region by this whole war, they were used to Middle Eastern oil, and Middle Eastern oil is usually medium heavy and sour. So this is essentially a perfect mix, because it yields a wide array of products. But at the same time, those refineries in Asia are also used to this kind of crude. So they cannot really take WTI instead of Saudi crude, because the refining process between light and sweet crude and medium heavy sour crude is completely different. So all the refineries in the region would need to adjust their entire process, which is costly, time consuming, and not always possible under current conditions. So instead, what those countries are looking for is either Iranian oil, which is also mostly medium heavy sour or light sour, or they're looking at Russian oil, which is as well medium heavy sour. That can explain why there is no discount currently on the Urals oil, so the Russian oil. That can also explain why WTI, so crude, is still below $100 a barrel. Outside of government market manipulation, this is basically type of oil that's not really attractive for the most affected countries. So that's a long story short on types of oil. If we had here some physical markets as well, then we could also see that oil price from Dubai, from Saudi, from Oman is even more expensive at around $150 a barrel, simply because there is little way to actually transport it. Yeah, so that's long story short on oil. And ending this story, we can also take a look at WTI in April 2026. And here traders, even though this American oil is not exactly a great fit for Asian or European refineries, we can see that anyway traders expect this oil to hit over $100 a barrel. Even in March, there is still 76% chance we will see a close above $100, and we have only 2 days of March for that to hit. So you can clearly understand there is expectation of escalation in the coming week, and this escalation should bring all of the oil prices up. Additionally, we also learned yesterday that Houthis from Yemen entered the war. For now, they launched only ballistic missiles on Israel, but they're supposedly mulling closing the Bab el-Mandeb Strait, so the one that is between Yemen and Africa, the one that was closed during Gaza war. And if such a thing happens, we can expect oil prices to jump even higher, as there will be no way to transport Saudi oil to Asia, for one thing, and for the other thing, there will be only one place, which is either the East-West pipeline in Saudi Arabia or the Suez Canal. And if either of the two are hit, then there's pretty much no way to transport Middle Eastern oil to Europe as well. So then we'll also see a pretty high increase in energy prices, as Europe will realize that it is also in a very bad spot. But let's leave oil for now. I think it's pretty clear that the situation is really dire. I didn't even venture into other commodities or stuff like fertilizer, which majorly comes from Middle East as well, and this will have effect on food, on crop yields, on food prices. Additionally, to increased cost of transportation. So considering we are not ending this war anytime soon, I think in the second half of this year we'll really start to feel all the massive consequences of this war. We'll see them at we already see them at gas stations, but we'll see them in shops. We'll see them across all different types of products, because it's not only food. Anything that is packaged using plastic, anything that requires transportation, everything will become more expensive. And that's not even saying about some of the poorer countries that will not afford increased energy. They will not afford more expensive food and risk riots or even collapse. I think the best example here to illustrate the situation is that Sri Lanka had a government collapse after the Ukraine war, which is pretty much because electricity prices went up significantly as Europe bought up all the spare gas capacity as they tried to lessen their reliance on Russian gas. And in the end, it was Sri Lanka which lacked enough resources to actually function. there is a high chance we'll see similar situations in the coming months across some of the poorest countries in Asia. We already see shortages across Philippines, Vietnam, and Laos, as well as Bangladesh or Bhutan. We also saw some footage from India where people are hoarding gasoline or diesel. So this situation is really, really ramping up, and in the coming weeks, as I told you last week, we'll see more of such news, and they will be more frequent, and some of the situations that will be reported will be more dire than even what we see right now. As you can see, coming a bit to the Bab el-Mandeb Strait, there is 44% chance we'll see the closure. I think that's pretty much on the lower side. Before the official entry of Houthi into this war, the chances of that hovered around 20%, around 30% then, and when they joined, this jumped to 56%. So there's a pretty high chance that we will even see a resolution of this market pretty soon. But now, we talked about ceasefire, we talked about the most important part of the conflict now, which is the Strait of Hormuz and the energy prices. We talked about the Iranian corridor, and that we should see some ships moving through, but they'll be essentially affirming Iranian control of the strait, but paying them a fee, which is actually not a de-escalation, it's actually increasing Iranian leverage, because any ship that moves through is a country that essentially affirms that Iran has control of the strait, which presents an even more difficult situation, because then Iran will say, look, countries around the world understand that this is our strait and we control it, and so have you, especially if the upcoming operation fails. And here, I think what we can say is that this will not be an escort operation. This will be some kind of boots on the ground type situation that will try to create leverage for the US. We can clearly see that the chances of US boots on the ground are being heavily traded, with almost $44 million in volume. And we can see that there's a pretty high chance we'll see them soon. There is a 61% chance we will see boots on the ground by the end of April. And on a longer dated market, there is 71% we will see them, with 72%, which pretty much means these are coming. And I was saying that it will not be necessarily used for an escort operation, but also because there is a chance that it will be used, for example, to take Karg Island and try to gain leverage over Iran. And here we can see that traders give a lot of weight to the rumors around Karg Island. We see that they give 43% chance that the US will try to take it over. As this is one of the interesting strategies, because if we are to game theorize what can happen in the next month in the strait, there are basically two options. And one option is that we'll have an escort operation, which we already said is not extremely likely because of its complexity and little effect on the global economy. And on the other hand, we might have US attempts to gain leverage over Iran, so they relinquish control of the strait. And that's why the invasion of Karg Island is priced so high. Traders believe that inflicting pain on Iran, especially when it comes to their access to exporting oil, might be a better approach. Additionally, there are other options. US troops can try to take over the Iranian shore. They can try to dismantle some of the launchers and missiles and drones that are aimed at the Strait of Hormuz. But what we are saying here is more of a speculation rather than a proper assessment. I do think that some operation is underway. I do think we'll see boots on the ground. I don't necessarily think they will land on Kharg Island. I would rather say a blockade of Kharg Island would be easier. But what we are seeing across the markets is that there is pretty much an equal chance of US escort operation and taking over the Kharg Island. Because end of April is at 33%, so this is pretty much equal. Traders are not really sure which way the US will go, but they're pretty sure they will go some way. Additionally, some of the pressure that can be created can also be created internally. One of the strategies I think the US is currently moving over is creating internal chaos in Iran. And you can achieve that pretty easily by engaging various militias in the region and incentivizing them to march on Tehran or create some sort of chaos in other major cities in Iran. So if the rumors that a lot of launchers and missiles and drones are actually destroyed, by creating such a diversion, the US would force Iran to choose between defending its own country from outside militias and keeping the pressure on the Strait of Hormuz to show its control. So there is a pretty high likelihood. I won't give percentages on that because I don't have them right now, but I would say there's a pretty high likelihood that we'll see a complex operation that would involve escorts taking control of Iranian shore, and at the same time also inducing some kind of internal chaos by introducing outside militias into Iran. So we'll essentially have a three-way effort that will aim to overwhelm Iran and essentially make them relinquish control of the strait in favor of defending their own country. This is at least what I'm seeing on the markets. I think that all of the three options, so the US escort operation at 33%, the Kharg Island invasion at 33% as well, and US military support of Kurds at 39%. There's not a lot of volume here, sadly, but this is my expectation of the price settlement pretty much. So we'll have an equal chances of US escort, Kharg Island invasion, and support for the Kurds. This can be that there's simply no clarity on the direction, but also this can be because traders are trying to understand if all three at the same time are also possible. And there is also a fourth angle to this whole situation, because rumors are that at least in some of those scenarios, either Saudi Arabia or United Arab Emirates might also join in on the offensive action. And here we have several options. When it comes to Saudi Arabia, we can maybe expect help with escort operation, especially air support. I would say this would be beneficial to Saudi Arabia. Saudi Arabia is also keen on seeing Iran destroyed, so at any point that their intervention can be beneficial, I think they will come in. When it comes to United Arab Emirates, they're mostly connected to the disputed islands. There are some islands near the Strait of Hormuz that are disputed between Arab Emirates and Iran. So if the US would, for example, decide to invade those islands, to actually set up, for example, some air defenses or some radars to aid with an escort operation, we can also expect some help from the United Arab Emirates. So as you can see, these markets offer significant premium over any other country, be it Bahrain, Kuwait, or any even EU country. When it comes to Saudi Arabia, it's the same. I don't really know what are the rules for this market. Let's see the market context. So yes is if the listed country initiates a drone, missile, or airstrike on Iranian soil or any official Iranian embassy or consulate. So this is interesting because I thought initially that this Saudi Arabia could be enough if they just joined the escort operation. I guess people are also expecting them to join in on any offensive action once the boots on the ground are in. I wouldn't be so sure about that. I think Saudi Arabia might have a lot of problems with Yemen, for example, the Houthis. I would say that rather United Arab Emirates are more likely to join in on the offensive, especially if there is some action on the disputed islands. But still, I think around 25% by the end of April is a pretty fair price. And so some little mispricing doesn't necessarily change the entire picture. So moving next, and this is probably coming a bit to an end and conclusion, despite everything that's happening, so intensification of the war, escalation, coming into round two, the chances of the Iranian regime fall before 2027 are lower than last week. They're still fairly high at 34%, but the market is definitely internalizing and digesting the current situation on the ground, which is that Iran is resilient, the regime is resilient, and any decapitation strikes don't really change the equation. Lastly, we can also see the Iran leader end of 2026, and since last week, Mojtaba Khamenei's chances, so Khamenei Jr. as I call him, rose a bit and stabilized around 45%. This is expected because the supreme leader is now well hidden. He's not really doing any press conferences or anything, and they will try to keep him under the radar. As in reality, it is IRGC that is currently in total control of the country. And also, adding to last week's analysis, we cannot forget that there is also action against Hezbollah in Lebanon, and it seems pretty clear that there are high chances we will see Israeli forces cross the Litani River in the South Lebanon by end of June, which is very suggestive of the fact that this war is not ending anytime soon, because I don't see Iran signing any kind of ceasefire if its main proxy force, being Hezbollah, is under heavy attack from Israel. Quite the contrary, I think that if Israel actually commits to this offensive, Iran will have even more incentive to continue and support the Hezbollah. Hezbollah has been supporting them, so we'll see a two-way action. Hezbollah will engage the IDF locally and on the ground, while Iran will continue to lob missiles and drones to the country to try to inflict as much damage as possible and divert some of the crucial military assets, especially air defense assets, away from the battlefield in Lebanon towards the most important cities, as well as the south of the country, so the furthest away possible from the action in Lebanon. And lastly, we already mentioned Houthis briefly during the Bab al-Mandeb trade. I also mentioned them during our analysis of Saudi Arabia joining the fight. And here as well, we also have the market on Houthis actually taking action against Saudi Arabia. And as you can see, there's also 34% chance we will see that happen in the next month. And this is probably my main reason in saying that Saudi Arabia here shouldn't be higher than United Arab Emirates when it comes to joining the fight against Iran, because there's a fairly high chance they will need to engage with the Houthis. Generally, the Houthi entrance into the war is really interesting. This is one of the developments I've been waiting for. And for me, their entry before any specific US action is actually indicative of US and Israel getting ready for some major operation. Because I didn't expect Iran to enable Houthis if there is a chance of a ceasefire or if the escalation is coming to an end. So the fact that they started to target Israel and they're moving over, closing the strait, is really an indication that we are moving towards further escalation. All right. I think this is everything I wanted to talk to you about this week. Generally, if I were to sum up everything we said today, is that round 2 is coming, and this round 2 will be a fight for the strait. There will be battle of the Strait of Hormuz, or whatever you want to call it. There's very high chance this battle will include some ground forces, be it on the disputed islands, the Karg Island, or the Iranian shore itself. I think it can be a multi-way action, so not especially. So it could be just an escort operation or just some ground operation to retake control, but most likely, in my opinion, is a complex operation that involves at least 2 of those options, including also sowing domestic chaos using outside militias, closing the Strait of Bab al-Mandeb, and possibly even engaging Saudi Arabia in Yemen. So essentially, we are getting ready for round 2. It is a major escalation, in my opinion. I don't really see this battle as easy for either side. I think we'll see some casualties on the American side. I think we'll see heavy fighting, and I don't really think there is clear advantage on either side. And if anything, I would say Iran has a bit of an advantage because defending the Strait of Hormuz and making any operation of liberating the strait difficult is fairly easy using drones. So I don't really want to say, but this whole operation in April doesn't really look good, and it may be a prelude to even deeper engagement in Iran. Moving forward, I will try to weave into those videos, because I expect to be talking about Iran for the foreseeable future. Also, some consequences on the global economy. I believe all the global events this year, from geopolitical events to elections, could be influenced by what we are seeing in Iran. So even if I'm for example, analyzing Hungary elections, I'm also taking into account higher energy prices and general market disruptions. So yeah, you can expect more diverse analysis, but all of it will be grounded in what we're seeing in Iran, because this is such a consequential event for every one of us that I will put it even above the pandemic or the Ukraine war. And as usual, if you want to read more about my thoughts, I invite you to go at prophetknows.com. This is my Substack where I put up my long-form thesis on global events. On Thursday, I put out my thesis on the Iran war and where we are heading. So while this video is more of a commentary and analysis of current events, the Substack piece is more about what we'll see in the future and why. And also, as usual, I invite you on my X, where I post on a daily basis and do a short form commentary. And obviously, if you like this video, don't forget to click subscribe and like it. If you want to hear more about different topics, leave a comment. And if you have any questions or you want to discuss some parts of the commentary, I also invite you to comment. So thank you everyone for listening, and see you next week for another commentary on Iran war and its global consequences.